Welcome back. I'm Pratap here. Today is the 12th February 2024. Let us analyze the performance of high liquidity zones generated in our previous report. Even before that, a small announcement, please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos can be accessible from our YouTube channel. From the home page, scroll down to the playlist Supply Demand Zone Price Action Course. Click on this playlist. All the training lessons are kept in this playlist. Scroll down to the bottom of this page and starting from lesson 1.1, all the lessons are placed in an order. Even the upcoming lessons also will be placed in this playlist. So please go through all these lessons and strengthen your skills related to supply demand zone price action. I have also provided the link to this playlist in this YouTube video description. By clicking the link, you can directly get into the page. And also I provided the link to our Telegram channel in this YouTube video description. So please visit the Telegram channel and all the training videos and other analysis video links will be available. And please join in the Telegram channel so that before release any new video, you will get an update in the Telegram channel. Okay, now let us get into analysis discussion. Yesterday we have identified 9 high liquidity zones. Sorry, 8 high liquidity zones. Out of these 8, 3 zones are triggered and we got a very good profits. First I will do analysis of all the 3 stocks where the price is triggered and we got the profits, because an interesting thing happened. Today you would have got an opportunity to trade in all these 3 stocks, because after completing the first stock, the second stock is triggered. Again, after getting the profit of second stock, third stock is triggered. That way the whole day you might be in trade, probably just for one futures. Maybe cost is maybe all these 3 average cost could be around 1,50,000, and you would have got over 42,000 rupees profit if you would have taken a trade in all these 3 stocks. The first one is SRF. SRF is a 75 minutes supply zone. So let me go to the 75 minutes time frame. See, this is a rally base, the drop candle. That is the ERC candle. And inside this 75 minutes, we have fine-tuned the 15 minutes. And that 15 minutes is also a high liquidity zone. Let me show you. Inside 75, we have 15 minutes high liquidity zone. We have a rally, base and drop. It's not a great leg out, but the prices were moved within the zone, then came down, again gave a test, again gave another test, again gave another test, again gave another test, and today also it gave a test. So this 15 minutes is a high liquidity zone. And inside the 15 minutes, again we fine tune to 5 minutes. That 5 minutes is also a high liquidity zone. So very interesting. 75 minutes is high liquidity. Inside we have 15 minutes. That is also high liquidity. Inside 15 minutes we have 5 minutes. That is also a high liquidity. That means the exact order flow they kept here. The huge order flow. That's why we are calling high liquidity. See here we have a rally candle, a base candle, the 5 minutes. And then we have a drop candle, follow through candle, This drop is not a great one. This is a great follow through candle. Or maybe you can consider both these candles as base candles and then drop candle. That is also possible. Either way you can treat. But see here, after that, there is a push into the zone and again came down, again went, and there is a huge fall from here, and then again prices went here, came down from the 5-minute zone. Again it gave another test here and again prices came down. And this time they didn't go inside but came very close, and here also. And this one we can consider as a test. Maybe there could be just 1 or 2 rupees difference, not more than that. So this was the last test, and today again. And from here it reached the 15-minute zone. Rally, base rally. And this is the target. And we got the entry at 9 o'clock 30 minutes, 15 minutes candle. And if you look into 1 minute price, you will get clarity. Nine o'clock 39 minutes we got the entry, and then reached the target at 10 o'clock 28 minutes. So within 1 hour this trade is finished. That way SRF has given a profit 14,100 rupees, which is 9.2% ROI, return on the investment, as per one future slot, as per the cost of one future slot. Cost means it is not the complete cost, it is the margin cost. Whatever the margin amount we pay for that margin amount, the 9.2% is the ROI, not the entire cost of the futures. Because always we calculate ROI based on the margin cost of the future, because that is our investment. So for that investment, how much profit we got? And soon after SRF is completed, the UPL, let us look into UPL. Yesterday, I clearly explained you should not take a trade on UPL supply zone. But demand zone is a daily. Inside the daily demand zone, the supply zone, 75-minute supply zone is there. There could be chances, higher chances supply zone will be violated, and the 5-minute zone is also, structure is not good. So that is the reason why I told you not to take a trade in this zone. Moreover, risk also cannot be calculated. First of all, the structure itself is not at all good. But what institutions has done? They have created again a new zone today. They created a new zone. We have a rally candle, next one rally. This you can consider as a medium size base candle. Then again a drop candle. So that way they created a 15 minutes. Inside a 15 minutes, you can find a 5-minute zone here. Rally base drop. Maybe next time prices enter into this rally base drop, you can take a trade. Because earlier structure is not good. Because this is a high liquidity, there are higher chances the zone will be violated if the structure is not good. The only one condition zone won't be violated. That is what I told you several times. Even in the training lessons also I have explained in our training lessons. In zone confluence training, in the training video I clearly explained. The zone will be violated except only one chance. What is that? If institutions creates a new zone inside that zone, one lower time frame zone. So that means this is a 75-minute zone. Inside 75 minutes, institutions created a 15-minute zone. Inside the 15 minutes, we identified a 5-minute zone. In this 5-minute zone, you can plan a short trade. But anyway, prices did not enter into this today. But where we have taken the trade? In the daily high liquidity zone. Previously, already we have drawn this high liquidity zone. Let me show you. This is the daily high liquidity zone. We have a hidden body rally candle. 1, 2, 3, 4, 5, 6 base candles. Again a rally candle. That way a zone is created previously. So inside this zone, we identified 75-minute zones. The first 75 minutes is very important because that is the inside that 75, a new 15-minute zone was created. Sorry, let me get into 75 minutes time frame. This is 75 minutes. And here, you have a drop, base, and a rally candle with gap, pro gap. See here, we have a pro gap. Anyway, this candle you will be adding hidden body to understand this candle. But this entire thing is a pro gap. That is the reason why how I have drawn in the entire pro gap area, I have drawn the 75 minutes. Generally, we draw the zone like this. Because there is a pro gap, because there are institutional pending orders will be there, or within this pro gap area, again and again institutions might create a new zone. Because you have to get a clarity. What clarity? Up to this area, this is a 75-minute zone area. That's why I have drawn the zone like this. So within this area, if a new 15-minute zone is there we get a trading opportunity. Now let me show you the 15 minutes area, today's our whatever the trade we got, let me show you that. Excuse me. So this is a 75-minute zone. Now I am going to the 15 minutes time frame. Now observe carefully. See this area, this light color green compared to the one below. This is a 75 minutes pro gap area. In this 75 minutes pro gap area, we have a drop, base, rally is there. Last Friday it was created, this drop, base, rally. And today prices entered into this area. At 11 o'clock, 30 minutes, the 15 minutes candle. That means soon after our SRF trade is completed, we got this trade. And what is the target? Because this is the one, this is the 15 minutes new zone is created today. Today morning at 9:45, a new 15 minutes base candle, then we have a drop candle is created. So this is going to be our target. Inside we have 15 minutes at the top of this candle. Inside this 15 we have 5 minutes supply zone. There we can plan a short trade, but prices didn't reach that area. But this is going to be our target for this trade. When we got a 10:30 candle, if you miss 10:30 candle, 11:45 candle also, we got this. Not 10:30, 11:30 candle. If you miss 11:45, 15 minutes candle area, we got the opportunity. If you look into 1 minute, you will get better clarity. See here, this is the area, this is the time, either 11:37, if not again at between 11:50 and 11:52, we got a trading opportunity. See, after that, see how the prices moved up and finally reached the target at 12:45. That means before our third trade starts today, this second trade is completed. This is the way UPL has given as per one futures lot I am comparing for our statistics point of view. Here I have to tell you an important point, but before that, I am just calculating as per our statistics point of view, 9,490 profit, which is 6.6% ROA. But today, UPL is banned in F&O segment. Why UPL is banned? Because whatever the lots they have planned, if 90% level, if it reach already the trading reaches to that level, generally exchange ban trading on that. So that is the reason why you cannot place a new order in UPL in F&O segment. But still you can take a cash trade. Whatever the money, because this is the intraday trade, during the intraday, same margin amount you get in the cash trade also. The equivalent, whatever the money you are spending for one future slot, same money, same number of shares, whatever a future stock is having, same number of stocks you can get even in cash trade. Cash trade also we get margin amount during the intraday. That way you could plan the trade. Maybe you may take a less number of shares, that is your trade plan, but I'm comparing as per one future slot point of view, because always we do our statistics calculations for reference purpose as per one future slot point of view. Because this is a demand zone, obviously you go for a long trade during the intraday segment. Okay, now after this, the next trade is in ACC. Now let us get into ACC stock. ACC is also a daily, sorry, ACC is not 75 minutes, it is a daily high liquidity zone. We have a rally, base candle and a drop candle. When this zone is created in September 2022, here we have one problem, September 22. Mostly you won't be getting 5 minutes time frame data. That means we have an ambiguity. What kind of ambiguity? What could be the structure of the 15-minute zones? Up to 15 minutes you can fine tune. Generally, many times what we did, we didn't take trades. We just ignored those stocks. But still, you can take a trade. I will tell you one trick why we can take a trade. First, let us understand how we fine tune this zone. So, inside daily zone, you have to fine tune to 75 minutes. In the 75 minutes time frame, we have identified a fresh zone here. See, here we have a rally candle, 4 base candles and a drop candle. You can also consider this also a leg-in candle, 3 base candles and a drop candle. That way also you can consider. It is up to you. I consider this as a leg-in because I'm seeing this is a little higher than the medium size. That way I'm considering 1, 2, 3 base candles and a drop candle. Anyway, this area is see, this marking is mainly to identify the real order flow inside this area. Now we have to fine tune to 15 minutes inside the 75. See how we fine tune here. You can consider a rally candle, 3 base candles with the hidden gap. You can consider this as a leg out candle. See, if you add the hidden gap, this is going to be a drop candle. Rally, base, drop. This entire gap area is going to be like a drop area. After that, you can remaining is the wick part. That way you can consider this is a rally, base, drop, leg out candle. Next again, this is again leg out, previous leg out could be acting as a leg in now. This is a base, again a new leg out candle. That means we have 2 zones. You can fine tune in this area, you can also fine tune in this area. Okay, the first one, but the problem is we don't have 5 minutes data because TradingView gives only last 1 year data for the 5 minutes. So if without data, how do we know the structure of this zone? First of all, how do you minimize the risk? That's why anyway you cannot plan your trade in the upper 15-minute zone. In this zone we cannot plan because 3 candles are there. We don't know the structure is going to be. But what about here? Here we have a ERC candle, leg in, base, drop, and this base is only one candle mostly. I'm not saying this is possible. Mostly, the worst case, mostly means in worst case, this one candle is reflected to 5 base candles. That way our 5-minute zone probably is having maximum 5 base candles. In case if the structure is not proper, if you assume, probably 5 base candles will be there, and after that there is a drop candle. And also remember, from the previous base candle and this recent candle, previous candle close and the recent candle open, there is a tiny gap is there. A tiny professional gap. Probably there could be a strong order flow in this zone, the small area. That possibility is also there. So that's why what you can do, you can plan your trade rather than planning just to the close. Till this open of this candle, you just extend. And moreover, the risk of this 15-minute zone is very, very, very less. That is already minimized. So risk point of view, we don't have an issue. If number of candles also, mostly there won't be any issue because this base candle, worst case, it will be reflected to 5 candles. All the 5 candles also, if the structure will be there in an order, up to 6 candles we can allow in a zone. If you want to take a trade, up to 6 candles we can allow. And one advantage we are getting, there is a pro gap, a tiny pro gap. Even if you include the pro gap, the risk is very, very minimal because it is a tiny pro gap. But pro gap is always an advantage area. There are higher chances the real order flow will be there in that pro gap area. That is what exactly happened today. The tiny pro gap area, prices entered and see the push from there. Look into today's trade. See here what happened after it reached. Prices went, they went into this pro gap, tiny pro gap area. Within the pro gap, just entered 1 rupee above that, inside the pro gap. We got the trade. See the rejection. Huge rejection from here. See how much strong order flow is there. And after that, see how the prices down and again reached the 15 minutes demand zone. Drop, base, rally. This is the demand zone. Prices reached. And when we got the trade, at 2 o'clock we got the trade. And finally, when it reached the target, during the last hour of the last 15 minutes of the trading. Maybe if it is an intraday trade, you could not do this trade because intraday trades will be closed during last 45 minutes, if I am not wrong. But futures you can take a trade. The advantage with futures is at any time, just before 1 minute before closing market hours, or even 15 seconds before market closing hours also, you can take a trade or you can close the trade. Anything you can do. That is the advantage we have with futures. So we got a trade and finally it reached. That means all these 3 trades are executed one by one today. If we would have properly observed all these 3 trades, and that way ACC has given 18,930 rupees profit. 18,930, which is 11.7% return on the investment. Because the order flow is such a strong, see the push even during last 1 hour also, last 1.5 hours, sorry. Because 2 o'clock it entered into this area. If you look into 1 minute, you will exactly know the time from when it entered into the zone. At 2 o'clock 3 minutes, it entered into the zone. And when it reached the target, at 3 o'clock 18 minutes, it reached the target. That means almost 1 hour 15 minutes the trade is completed. That way ACC has given 18,930 rupees profit, which is 11.7% return on the investment as per one futures margin cost. So these are the only three trades got triggered today, and all the three are successful with very good profits. If anybody would have got all these three trades, would have planned all these three trades, you would have got 42,000 rupees profit. Because after completing the first trade, your amount is released. Still, same amount again you can use for taking the trade in the UPL. After completing that again, your amount will be released. After that, you would have taken a trade in the ACC. So same capital you rotated without adding again any additional cost for taking your next future. Maybe if it is future, if it is options, or if it is your intraday trade, maybe your intraday capital, whatever it is. So these are the three executed trades, and the remaining stocks we did not, but still we will analyze because it will be a learning for people who are trying to learn how to fine tune the zones in an effective way. The first one is actually Bajaj Finance. We didn't get a trade, but how I fine tuned here. In the Bajaj Finance, already we have a high liquidity zone, drop, base, rally. This is, and below that there is one more high liquidity zone, rally, 1, 2, 3, 4 base candles, and again a rally. And both these zones are overlapped. That means LOTL. That means two high liquidity zones are overlapped with each other. Both are high liquidity zones. We were looking for a trade in this area. This one we already discussed. Bajaj Finance, I think uh, last Friday also we discussed. I have shown you all these things on Friday. That's why I'm not going to explain the same thing because this is already discussed on Friday, last Friday. So today prices entered into the zone, but they couldn't get inside this fine-tuned area. Because always we take trades in the fine-tuned areas where the real order flow is there. That area only we take the trades. That's why we always get good profits. So Bajaj Finance. Next one is Tata Chemicals. Tata Chemical, we didn't plan a trade. The reason is this zone is not good in 5 minutes area. See, this is a daily zone. We have a rally, base, rally. So inside this, we fine tune to 75 minutes. In the 75 minutes, we identified a drop, base, rally, and a follow through candles. This is the way we have drawn this 75 minutes. But previously, prices are entering from here and they are reacting. There is a strong order flow is there inside, but the problem is the structure we didn't identify properly. Already we got a trade here earlier from this zone. It is already tested once, moreover. But still we can't take a trade, we can't plan a trade. The reason is look into the 15-minute zone. You will get clarity. Inside the 75 minutes. The data is not there. Sorry, this is I'm looking in 1 minute, 15 minutes. What I'm wondering why how data is missed. See here. This is 75 minutes area. How you plan a trade? Where is the zone here? This is a ERC candle, drop candle. This rally candle again ERC candle. This drop candle again ERC candle. If you want to consider all these are all base candles, where is the leg out? All these are all medium size candles. So that is the reason why we cannot plan a trade here. The 15-minute structure is not really good. So 15 minutes zone itself we cannot draw. So that is the reason why couldn't plan. But previously once prices entered into this area, maybe there a new 15-minute zone might have been created. Let us check. See here also there is no 15 minutes zone. Previously when it is came here and prices moved up. Because the zone is not there, we cannot plan our trade. Maybe order flow might be there inside the zone. Maybe they might have kept a new orders. If they kept new orders, probably the zone is not visible inside that. But whatever it is, we need a zone to identify where exactly our entry, where exactly our stop loss. Because we need a zone high, zone low, and base candles. So such kind of 15-minute zone is not identified. We cannot plan a trade. So that is the reason why Tata Chemical is left after drawing the 75-minute zone. You may say, see previously there is a rejection from here. Next time when it reaches, can't we plan a trade? If you plan a trade, that is not a demand and supply zone based trade. Your normal traditional technical analysis, support and resistance concepts based on that. But that concept is quite dangerous. Because you don't know exact entry point, you don't know what could be the stop loss. If we have a zone is having zone high and zone low. That way we can identify what is our entry and what is our target, how much risk we are handling. Everything we have the clarity. Our risk management will be easier if zone is there. Without a zone, if you want to take a trade based on our old technical analysis concept, support and resistance, that never supports our risk management properly. Why people got so many losses when they are using support and resistance? Because it doesn't support risk management properly. So that's why we can't plan a trade when the zones are not clear. That's why this is a very important learning from this talk. ACC we already discussed. The next one is a Divis lab. This is a zone violated today. We know this zone will be violated. How we know? Let us look into first the zone. It is a 75-minute zone. Drop 1, 2, 3 base candles and a drop. Today this zone is violated. Already previously once it is tested. That is one indication. But if you look into 5 minutes, you will get better clarity. First we will see 15-minute zone. See, we have a leg candle, 2 base candle and a drop candle. The prices went very deep inside. Prices went very deep inside. That means in this area, the order flow is consumed. The entire order flow, maybe near the digital line, if at all some trades will be there, maybe it will push down, but that is very risky. Very close to the digital line, taking a trade is very risky. We cannot plan trades like that. So that's why today what happened? Easily this zone is violated. But here you can ask a question. Here a new fresh 15-minute zone is created. Can't we plan a trade here? Can't we draw a zone like this? This is a fresh zone. Maybe there could be more pending orders will be there. Anyway, this is inside 75 minutes. Inside 75 minutes, this is a 15-minute zone. Inside 15 minutes, definitely we may find a good structure of the 5 minutes. But see the 5 minutes. Now you itself will tell. Look into this 5 minutes. We have a rally candle. We have a drop candle. In between base candle 1, 2, 3, 4, 5, 6, 7, 8. When you have these many base candles, what will happen to the zone? The zone will be easily violated. See, that is what. If you look into 1 minute, you get better clarity. Not even any resistance from here today. See, this zone is easily violated. In the top also easily violated prices. The first is the top zone, the 15-minute zone, why it is violated? Because already there is a order flow reached close to the distal line. The newly created 15-minute zone, why it is violated? Because the 5 minutes candles inside, the structure is not at all good. So that is the reason why, because we already identified when a zone will be violated. We know the reasons. So that's why we didn't plan a trade in Divi's lab. And the next stock is ZMR Infra. ZMR Infra is a 75-minute zone. We have a rally candle, 3 base candles and drop candle. And inside this, we identified 15 minutes. Very good zones are there, 15-minute zones. Drop, base, drop. It's not a great, but there is a follow-through candles are there, many candles after that. One base candle is there, but drop candles is there. So how I consider it is a drop, 3 base candles, 1, 2, 3 base candles and a drop. Drop, 3 base candles. This is the 15-minute zone. And again here, there is again a rally candle, 2 base candles and a drop candle. This is another 15 minutes. This 15 minutes on the top 5-minute zone is there, both overlapped. Zone confluence is there. But this time the zone confluence is at the distal line. Not exactly inside, but overlapped. Overlapped also is allowed in zone confluence. That is what I explained to you in our lesson 16, zone confluence. Now look into 5-minute zone. Inside 15 minutes, look into the 5-minute zones. So here we have a drop, 1, 2, 3, 4 base candles and a drop candle is there. That way we have one 15-minute zone. And here we have a high liquidity zone, the 5 minutes. Rally, base, drop. This is a high liquidity zone. Lot of order flow is there in this area. Let me delete this 15-minute zone, you get clarity. Not only order flow, it is again creating new zones. Rally, base, drop. Again rally, base, drop. It's keep on creating. What is the one important observations we can make? High liquidity zone is having the capacity to create several other zones, especially lower time frames, because 5 minutes is the most least zone we consider. Still we can go for 1 minute also, but mostly we stop at 5 minutes level. So that's why, because it is a 5 minutes, within that 5 minutes is creating. Generally, what happens inside the 15 minutes, new 5-minute zones will be created. Actually, that is what earlier we have drawn a 15-minute zone. See here. In this 15 minutes area, a new zones will be created. But here, 15 minutes is not the high liquidity, 5 minutes is the high liquidity. That is the reason why Within 5 minutes, again new 5 minute zones are getting created. Maybe if you look into 1 minute, you may see better clarity on these zones. You may see a good leg out, leg in and leg out candles there in 1 minute level. So these are the two areas where we can plan our trades. And moreover, this is a fresh zone. This is a fresh zone. So that is the reason why here we can plan a trade. But anyway, today prices did not enter into this zone. We didn't get a trade. And the next one, last one is a Naukri. This is again a 75-minute zone. But didn't plan any trades in this zone. See, drop, 3 base candles and a drop. And 18 June it was created. And recently prices went very close to the digital line. See here, prices went very close to the digital line. So what we have to do here in this area, is there any fresh 15-minute zones are created? That is what you have to plan. But unfortunately, could not find any proper 15-minute structure here. This is today's price structure. But here we didn't find any 15-minute structure. Maybe there could be on the top here, there could be some 5-minute structure might be available, but we can't access 5 minutes data because it is a 2022 zone. We get only last 1 year data. Maybe that is pushing the prices down after reaching. Maybe somewhere here, there could be a strong order flow. Maybe that could be a high liquidity also. But anyway, 15 minutes is not there, didn't plan the trade. But today, see, again prices came near to that, from where again prices were down. It would have given a very good profit. Because the data is not there, 5 minutes data, we are not in a position to plan a trade on this chart. That's why Naukri I didn't really look into this, but actually I have an advantage. I have in NeoStock software, I have a feature called supply demand zone chain. By looking into the 5 minutes supply demand zone chain, I can plan, or if any zone is there, I can identify. But somehow I just ignored it because already there were many other stocks are there. So that's why I have given a least importance to this. But today also prices exactly from this area, the previously see huge rejection. From there only again today prices came down. After seeing today's price action, I realized maybe there could be some high liquidity area might be there at 5 minutes level. But before, see, when I was drawing the zones, the situation is like this. This was the data. That's why I didn't care. See, previously and further deep inside it went. So because prices are nearing to the digital line anyway, taking trade is a risk, that is what. But if it is a 5 minutes high liquidity area, definitely we can plan multiple trades. That I didn't realize. And anyway, many other stocks are there. That's why I didn't really bother about this. But after completing this price action, I realized. But that was late anyway. I would have looked into Naukri's supply demand zone chain in our software to find the 5 minute zone in this area, if any. But anyway, let us leave this because data, trading view data is not there. I have to think from your point of view also. Without data, you cannot plan a trade. And SRF and UPL both we discussed. So this is about the high liquidity zones generated in our previous report. Hope this information is useful to you. Definitely a lot of learning is there from today's analysis discussion. Hope this is useful to you. Let us all meet again in our next video. Thank you.